Hello, how are you doing? I hope you're doing well. My name is Elijah and welcome as we look at a question on preparation of a cash flow statement. We'll use a question that appeared in CASNEB CPA May 2018, question number 4, part B. So the question reads, the following are the financial statements of Olekina Limited for the year ended 31st March 2018. So you have Olekina Limited income statement for the year ended 31st March 2018, shillings in million. We have revenue, cost of sales, we get gross profit, less distribution costs and admin expenses, less interest paid, add interest received and less interest paid, the less tax, then we get profit after tax. Next, statement of financial position. We have assets, non-current assets, PPE, intangible assets and investments. Current assets, we have inventory, receivables, short-term investments and cash in hand. Under equity, we have share capital, share premium, revaluation reserve, retained earnings. Non-current liabilities, we have loan. Current liabilities, we have trade payables, bank overdraft, tax, and there is the total there. Additional information. During the year, the investments classified as non-current assets were sold. The proceeds of the sale of these investments amounted to shillings 15 million. Fixtures and fittings with an original cost of shillings 42.5 million and a carrying amount of shillings 22.5 million were sold for shillings 16 million during the year. The following information relates to property, plant and equipment. We have 31st March 2018 and 2017, cost, accumulated depreciation and carrying amount. Number 4, 2.5 million ordinary shares of shillings 10 par value were issued during the year at a premium of shillings 2 per ordinary share. Dividend totaling shillings 40 million were paid during the year. Required statement of cash flows in accordance with the IAS 7. So let us jump right into attempting this question. You remember we'll need to prepare ledger accounts for all items of non-current assets and also for all items of equity. That is share premium, capital, revaluation reserve and retained earnings, and also for all items of non-current liabilities, in this case a loan, and also for tax. Good. So I've already drafted the ledger accounts, so we'll just be filling in the same. So we'll begin with PPE account. The opening balance is how much? Is 152.5 and the closing is 190. Okay. Next, intangible assets. The opening balance is 100 and the closing is 125. Next, we have investments. The opening balance was 12.5 and the closing balance is dash. Okay. Next, we have share capital. Account. Opening balance 75 and closing is 100. Next, we have a share premium account. Opening balance 75 and closing 80. Okay. After that, we have revaluation reserve. So revaluation reserve account. Opening balance is how much? 45.5 and closing is 50. Next, we have retained earnings. Account. The opening balance is 90 and the closing is 130. Yeah. Next, we have loan. So loan account, opening 25, closing 85. And finally we have tax account. Opening is 55 and closing is 60. Good. So the next thing now is to incorporate the information under additional information. The first one says that during the year investments classified as that were sold. So investments were sold for 15 million shillings. So we'll need to have a disposal account for investments. So we say disposal account for investments. Okay, what was the book value of those investments? 12.5. So we will say 12.5 disposal, and then we debit disposal account with the same value. So 12.5 say investments. Okay, how much cash was received? They received cash of 15 million. So the balancing figure will be 2.5, which will be a profit on disposal. So profit on disposal. Good. Next, the next additional information. Number 2, fixtures and fittings with an original cost of 42.5 and a carrying amount. Carrying amount is the same as the net book value of 22.5 was sold for 16. So you can have disposal account for F&F. So disposal account for F&F. The carrying amount was 22.5, so that is what we get from the PPA account, and the cash received was 16. So the balancing figure then will be a loss on disposal. So that is 22.5, 22.5. The difference is how much? I think that should be 6.5. Good. Next, the following information relates to PPE. We will be interested with the accumulated depreciation account so that it can help us know how much was depreciation for the year. So the opening balance is 145 and the closing is 170. So 145 and 170. So we can say provision for depreciation account. Of course, in an exam you will need to write that in full. We said that the opening was 145 and the closing was 70. So 145 and 170. Balance brought down and balance carried down. Okay, now the balancing figure will be depreciation for the year. Depreciation for the year. Okay, we'll look at that later. Next, we have 2.5 million shares of 10 bob each were issued. So issue of shares was worth how much? Issue of shares was worth 2.5 million times 10 shillings. That gives us 25 million at a premium of that. So premium on issue of shares, premium on issue of shares will be 2.5 million shares times a premium of 2 bob. That gives us 5 million. So premium is 5 and issue is 25. Okay, so we will say 5 premium on issue of shares. Premium on issue of shares. Does that balance itself? Yes, that account balances itself. And for issue of shares we had 25. And that account now balances. Good. Next, dividends totaling to 40 million were paid during the year. We will take care of that at a later stage. So let us now start balancing of the accounts. To balance PPE, we will first need to balance the revaluation reserve before balancing the PPE. Here the difference is 4.5, so that will be revaluation of PPE, so that can be 50. So we take the 4.5 to the PPE account. So 4.5 we say revaluation. Yeah, 4.5 revaluation. Good. So the next thing we need to get is depreciation for the year. I also need to remove the disposal of PPE, that is 22.5, so that then we can balance and get the value of our amount purchased. Okay, intangible assets, the balancing figure is on this side, so it will be purchase. So 125, 125. Investments, it has now balanced itself, 12.5, 12.5 because of the disposal. Next we have loan account. The difference is 60, so that it is now 85, 85. So the balancing figure will be acquisition of a loan, acquisition. Yeah. Next is tax account. Let's get tax for the year was how much. The income statement, tax for the year was 70. So in the tax account we'll have 70 as tax for the year. That gives us 125. So 125, the difference will be 65. So that will be cash tax paid. Then for retained earnings, we had retained earnings for the year, so we can say even income statement or retained earnings for the year. Let's see how much was that from the income statement. That was profit after tax of 80. So we indicate 80. Where is that? It is here. We indicate this as 80. 80 plus 90 gives us 170. So this should balance with 170. The difference will be the 40 million, which represents the dividends paid. That was in the very last additional information. Good. Next, which other account is remaining? I think the only account remaining is PPE account and provision for depreciation account. Yeah. So this is 170. 170. So 170 minus 145. Let's see how much that gives us. So 170 minus 145. Yeah, that gives us 25. But before that, we need to indicate the depreciation for the disposed item of plant, that is furniture and fittings. Let's get the accumulated depreciation of that. Now it had a cost of 42.5 and a carrying amount of 22.5. So 42.5 minus 22.5, that gives us 20. So we need to indicate that first before balancing that account. So this is 20, sorry for the oversight. So that will be 190, 190. Yeah. So 190 minus 145, I think that should give us 45. Is it 45? Yes. So 45 will be our depreciation for the year. So here we will say 45. Now let us add those values, we see how much we get. So 45 plus 22.5 plus 190. That gives us 257.5. So 257.5. We minus, so minus 152.5 minus 152.5. We also minus 4.5. So minus 4.5. That gives us 100.5. Good. So 100.5 will be the value of purchase. Okay, so we are now done with the ledger accounts. So the next thing now will be to start preparing the cash flow statement. I've already prepared a draft, so we'll jump right into doing the same. We will need to begin with cash flows before interest and tax. So not cash flow, sorry, but net profit. So net profit before interest and tax. Before interest and tax. We will need to determine that. Let's see what our income statement gave us. It gave us, how much is this? We have 175. 175 is before the adjustments for interest and also before tax, so we'll take 175. Good. So we will say 175. Then we say add stroke less non-cash items. Non-cash items. Okay, which are these non-cash items? Depreciation, disposal, and such other. Sorry, depreciation, loss on disposal, profit on disposal, and such other things. So we'll have depreciation for PPE. Allow me to write in short form, but for your case you will need to write in full in an exam. We also had the loss on disposal. Loss on disposal of PPE, or rather of furniture and fittings. We also had a profit on disposal of investments. So profit on disposal of investments. Okay, so for depreciation of PPE, how much was that? That was 45. So 45. Loss on disposal of PPE, sorry, of F&F. We have disposal, where is that? Disposal of F&F, the loss was 6.5 and the profit for investment was 2.5. So 6.5 and 2.5. So 6.5 and 2.5. For the profit we will deduct it because it does not reflect real movement of cash into the business. So let us get the result of that. So let us move our calculator. So 45 plus 6.5, 45 plus 6.5 minus 2.5. Yeah, that gives us 49. So this is 49. We add to 175, so plus 175, 175. That gives us 224. So 224 is our value of what? Is our value of net profit, sorry, of cash flows. Cash flows before working capital changes. Before working capital changes. So next we move to working capital changes. Working capital changes. Okay, let us underline that. These involve major increase and decrease, increases and decreases in inventory, receivables, and payables. So for inventory, for instance, it is 75 minus 51. That should give us 24. Next is 195 minus 157.5, and also 63.5 minus 59.5. I think that gives us around how much? That should be 4. Yeah, I think this should give us 4. Then we can get the difference of 195 minus 157.5. So 195 minus 157.5. That gives us 37.5. So 37.5. Good. We can now indicate our elements. So we will say increase in inventory. Increase in inventory. That is how much? 24. When inventory increases, it means that we bought more. If we bought more, it means we used more money out of the organization. So we will say 24, then put that in brackets. Next we have increase in receivables. The same thing, when receivables increase, it means we gave out goods on credit, and that is like giving out money. So 37.5. Next is increase in trade payables. When trade payables increase, it means that they gave us goods for free, or other goods for us to pay later. So it means it is like we received cash. So in trade payables, that is how much? That is 4, so it will be positive. Okay, let us add that. So 4 and 20, that is like and 24, that is like negative 20. So negative 20 and negative 37.5, that should give us negative 57.5. Good. Let us get the result. So 224 minus 57.5, 166.5. So 166.5. That will be net cash flows before tax. So net cash flows before taxation. Next we say less cash tax paid. Less cash tax paid. Let's see how much cash tax was paid. Where is taxation account? Tax is here. Cash tax paid was 65. So minus 65, that should give us 101.5. So that will be net cash flows from operating activities. Good. Next we will need to move into the next point, that is cash flows from investing activities. Okay, investing activities majorly involve purchase and sale of non-current assets. So for instance, there was purchase of PPE by how much? By 101.5. When we purchase an asset, money moves out of the organization, so that should be in brackets. We also had purchase of I think that was intangible assets. Let's remind ourselves how much that was. Intangible assets, they are here. The purchase was 25. Sorry, this was 100.5, not 101.5. So 100.5, and this is 25. It should also be in brackets. Then we had disposal of 2 assets. We had disposal of F&F, the cash we received of 16, and also disposal of long-term investments. We received a cash of 15. Good. So we can now get the final answer. So that is like 125.5 minus 31. So 125.5 minus 31. That gives us 94.5. So 94.5 is the value of net cash flows from investing activities. Of course, this is in brackets. Investing activities. Good. Next is moving to cash flows from financing activities. Okay, financing activities involve activities such as issue of shares. So we had issue of shares. We had premium on issue of shares. Premium on issue of shares. We also had what? Loan acquisition. We also had payment of dividends, or other dividends paid. We also had interest received and interest paid. So interest received and interest paid, and also interest paid. Okay, let us get those values. So issue of shares was how much? Issue of shares was 25, and premium on issue of shares was 5. So 25 and 5. So 25 and 5. When we issue shares, we receive money, so that is positive. Then next is loan acquisition. Where is our loan? Our loan is here. We acquired a loan of 60. So that is 60. That is also a positive value. We paid dividends of 40. That is negative. We received interest and we also paid interest. Let's get that from the income statement. Interest received is 12.5 and paid is 37.5. So 12.5 and 37.5. 12.5 and 37.5. Received is positive, but paid should be into brackets or rather negative. Okay, so let us get the final the answer to that. 25 plus 5 is 30, plus 60, that is 90. 90 plus 12.5, that is 102.5. So 102.5 minus 40 and 37.5, that is 77.5. That gives us 25. So here the answer is 25. That will be known as net cash flows. Net cash flows from financing activities. Okay, so the next thing now is to add up those values. That is 25 and 94.5 and 101.5. So 25 plus 101.5 minus 94.5. That gives us 32. So this is 32. That will be known as cash and cash, or net cash flows. That will be known as net cash flows for the year. Then we say add cash and cash equivalents brought down. So add cash and cash equivalents brought down, and then the final answer will be cash and cash equivalents, cash and cash equivalents carried down. Yeah, so let us get, or rather determine, the cash and cash equivalents. We'll begin with I can use a different pen. We'll begin with cash in hand. We have cash in hand, we have short-term investments, and then we will less bank overdraft. So cash in hand is how much? Is 1 and 0.5. Then we have short-term investments. Short-term investments, that is how much? That is 25 and dash. Then we have bank overdraft. Bank overdraft is how much? Is 42.5 and 49. Yeah, so let's see how much that gives us. This gives us 48.5, and this gives us 42.5 minus 26. So 26 minus 42.5, that gives us negative 16.5. So negative 16.5, this is also negative. Yeah, so we add 48.5. Our answer should be negative 16.5. So 48.5. So 32 minus that. So 32 minus 48.5. That gives us negative 16.5. So negative 16.5. Okay, let us compare if that is what we obtained. Yes, that is what we obtained. So that proves now that our question has balanced. Bye. See you possibly at another time.